from Invasset PMS is now joining in on the show. Anirudh, good morning. Thank you for joining in. Would you call this quarter a fairly resilient one considering the expectations that we had, or would you still fall into that category that the earnings recovery that was anticipated is still a couple of quarters away?
Firstly, a very good morning. I think that is the way the markets are. Markets are always future discounting, and that is what is happening in the markets right now. We are setting up a base for a better year to come. Though I believe that there will be some sectors which will continue to face these pressures going forward as well. But I think whenever there has been this uncertainty as is going on now, whenever there is confusion, whenever there is fears, especially the markets, not the companies, but the markets, they make better bottoms and provide a better opportunity of growth. We are very confident that in the next 3 to 4 months, we should see all-time highs on the Nifty.
All-time highs in the next few months. Can you quickly, Anirudh, take us through your top bets? I mean, the way your portfolio is constructed. I know, a couple of months back, you had said how pharma was your big bet. 20 to 25% of your portfolio was concentrated in the pharma healthcare bracket. How has it changed?
Okay, so now I think with the uncertainty coming over, though pharma is still CDMO, CMO was our bet, I still believe there is steam left there. But overall, we had shifted from pharma. Why? Because this uncertainty that Trump is, changing his stance every day, not behaving like the biggest economy in the world. So what we have done is we've made a portfolio Trump-proof. There are a lot of opportunities, domestic opportunities available. For example, the capital market infrastructure sector, defense and railways, and a lot of consumer names which are gaining traction. I think commodities are back in flavor. So we are just sitting on the side, and then if we get any early shoots of things settling down with the US, we'll enter those spaces again.
Anirudh, what about the capital market plays? There has been a lot of uncertainty regarding more regulatory action coming in for a lot of these players, but considering the fact that if the markets are bound to move higher, say over the next 5, 10, 15 years, do you see this as just another speed bump in what promises to be a longer term growth trajectory going forward for all of these players, be it the broking firms, be it the asset managers, and be it the depository participants as well, especially considering we have one listing tomorrow?
Yeah, so I think you're absolutely right here when we say that in the long run. See, the fundamental relative change is that the psychology of it is very, very difficult to change the psychology of the investor. We all come from the background where our parents and our grandfathers used to invest merely in FDs, and today FDs are no longer considered an investment by majority of the people because of those efforts of SEBI, AMFI, the mutual fund Sahi Hai campaign. People have shifted to the equity culture in the past 4 years. There's been tremendous change, and it is very difficult to get. It is I won't say a decadal change, but a generational change. And this relative change is much, much more stronger than smaller regulatory approvals. What regulatory approvals are happening, I think they will aid rather than stopping. They will aid the confidence of the people. They will strengthen it. So all these regulatory approvals where a few firms are making so much profit and the general public is losing, it is somewhere the duty of the exchanges and especially the regulator to check that such I would go to an extent of saying loot should not happen in the Indian markets. That is how the sanity and the trust in the market would be preserved. I'm totally with SEBI in it that options, I believe, are weapons of mass destruction unless used properly. And if they are doing it, delaying it to 15 days or maybe going forward into 30 days, I think it's a good move. The capital market infrastructure has seen a decadal generational change, and this change should continue.
NSDL, since we brought that topic on, did you all participate? Were you all subscribers in any firm at the anchor book or even otherwise? It's a very good subscription for a large issue. I think total was 41 times. And now once it lists, is there still any juice left?
I think there's still juice left, Rima, because these are the two monopolies out there. Yeah, it's a duopoly setup with one of the greatest. Indian markets. I believe Indian markets and your markets. They are the only two economies in the world where you will find democracy and demography both. which are very, very essential for stock markets to flourish. For these markets, there are only two depositories out there, CDSL and SDL. So I'm very, very bullish for them in the long term, though we have not subscribed to it because as per policy, we do not go in for IPOs.
Anirudh, a lot of these chatter around the tariff-related bit has had a lot of impact on all of these textile names, be it Gokaldas, be it KPR Mills, be it Wellspun, and the peers and so on. But do you believe that this higher tariff rate is detrimental to their prospects? And if you do have exposure to them, what do you recommend doing now, especially considering that there is an overhang here and there is, even if there is a deal that happens, this uncertainty is likely to continue to persist for at least till the current US president's term goes on. So what do you do with these textile stocks, particularly those that have a significantly large exposure to the US?
Okay, so we were primarily bullish on these companies because we believe that somewhere sanity will prevail and the better ones, the ones which are professionally managed, will rise from the ashes. But from what the US president is doing temporarily, I think it's okay to hold on. We don't have much exposure, not more than 3% of the total portfolio towards the US export-oriented sectors, but and definitely not more than 5 if we indirectly count the other companies as well. Going forward, I think US doesn't have an option. It is just trying to negotiate. I think offense is the best defense is what US is doing in a race which it lost to China just because it did not take toll in time. Now it is doing it, and the only way to do it is what US. I think one of the ways to do is what Donald Trump is doing. So ultimately, they're all politicians. Sense will prevail, business will prevail. Profits, and money making is permanent. Somewhere, I think things will get back to normal, and all the better ones will, of course, make as quality makes a higher high every time. The better ones will prevail and become even bigger from here.
Thank you, Anirudh, for joining in. That's Invasset PMS. They expect new highs for the market in the next few months, and they've made their portfolio Trump-proof as of now. So there's a big tilt in capital markets, domestic plays, whether it's in consumer, railways, defense, etc. Get into a break. On the other side, we'll tell you what the street expects from the RBI MPC tomorrow.